Hey everyone, ready for a deep dive on that Canadian tax ruling about Airbnb, the one about property sales?
I'm ready when you are.
Okay, awesome. So we've got some great sources today. There's this article from NJW Toronto, and get this, we even have excerpts from the actual court judgment.
Oh, wow. The actual judgment.
Yeah, 135-1231 Ontario Inc. v. The King.
Okay, that's pretty intense.
Right, I know. So today we are figuring out exactly what went down in this case and what it means for, Canadian homeowners using Airbnb. And probably the most important thing is how can you stay on the right side of the tax man? No one wants trouble with the CRA.
For sure, for sure. Taxes are no joke.
So, okay, this headline in the NW Toronto article, it really caught my eye. It said, Canadian homeowners who frequently rent properties on Airbnb could face 13% tax when selling it.
Oh, yeah, that's a scary headline.
Totally.
Yeah.
So is this like a real thing or just, some internet hype?
Oh, it's a real thing, all right? It's based on like a tax court of Canada decision from this year. It's pretty new.
So, no, this is legit. This is the law. Okay, so tell me more.
All right, so to be clear, this applies to properties when they're consistently rented out for short terms, less than 28 days on platforms like Airbnb and VRBO.
Gotcha. Short-term rentals, like furnished and all that?
Yeah, exactly. Furnished, utilities included. Think operating like a mini hotel. That's what we're talking about here.
Okay, so let's talk about this court case. This condo owner in Ottawa got hit with this tax. What happened?
Okay, so this condo owner bought their unit back in 2008 as an investment property, right? And then for the first 9 years, they rented it out with normal long-term leases, standard stuff. But then in 2017, they decided to try Airbnb.
Right. That was when Airbnb was getting super popular.
Yeah, exactly. So they rented the unit on Airbnb for something like 14 months, and then they decided to sell it. But here's where things went wrong. Neither the owner nor the buyer filed the GST/HST on the sale.
Oh, no. That doesn't sound good.
It wasn't good. The minister ended up assessing the owner for over $77,000 in GST/HST.
Whoa, $77,000. That's a lot of money. How did that happen? Why did they have to pay so much?
It's all about how the property is classified. So the condo, it was technically a residential complex under the Excise Tax Act. But there's an exception for properties that operate more like a hotel. The short-term stays, less than 60 days. The judge decided this condo was like a hotel.
So even though it was a condo, because of how they used it, it had different tax rules.
Exactly. It was more like a business than a regular rental. So the sale wasn't exempt from GST/HST. And that's why they got that big tax bill.
Makes you think a little more about short-term rentals, right?
Definitely makes you think. There's a lot to consider.
Okay, so the NW Toronto article mentioned a 90% threshold. What's that all about?
Oh, yeah. So this threshold, it was mentioned by Dale Barrett. He's the president of Barrett Tax Law. It was in an interview with the Toronto Star. And, well, it's not a hard and fast rule, but the idea is if you rent your property for, short terms more than 90% of the time, it might be a red flag for the taxman.
Oh, okay. So if most of your rental activity is short-term, the CRA is going to be watching you.
It seems like it, yeah. But the thing is, it's not really clear how they calculate that 90%. So my guess is there will be some arguments about that. And ultimately, I think the Canada Revenue Agency will have the final say if there are any, disputes.
Yeah, that makes sense. So, okay, for everyone listening, what should we be doing to avoid this tax surprise?
Well, first of all, keep detailed records, all of your rental periods, the income, expenses, everything.
Like a paper trail.
Exactly, just in case. And then be aware of your short-term versus long-term rental ratio. If you're getting close to that 90%, or even if you're just not sure, talk to a tax expert. Don't try to figure this out on your own.
Good advice. Taxes are scary.
They can be.
Yeah.
And lastly, when you're thinking about selling, factor in this potential tax. It can really change how much money you make. You want to have all the information before you make any big decisions.
Right, so it's not just about the selling price anymore. It's like a whole other level of planning.
Exactly. It's all about being prepared and knowing what you're getting into.
Okay, great advice. So the key takeaways for this part of our deep dive are keep those records detailed, be aware of your rental ratios, and don't be afraid to ask for help. We've got more coming up, so stay tuned.
Thinking about that Ottawa condo owner, something the judge said really stuck with me. They really focused on how the owner was running the property. It wasn't just like a casual thing, not just, oh, I'll rent my place a couple weekends.
Yeah, it was more like a full-on business, right?
Exactly. Short stays, furnished, utilities included, all of that, it all mattered to the judge. It shows how, with the sharing economy, things get blurry. Like, where's the line between just using your place and, like, running a business?
Right. So it wasn't just being on Airbnb, it was like the whole way they were doing it, how often they rented it. So someone listening might think, well, I only rent my place a few times a year, so this doesn't affect me. But
And that's where those detailed records are so important. Like, if anyone ever questions how you're using your property, you need that proof. It's like insurance. You hope you never need it, but you're really glad you have it if you do.
yeah, I get it. And it can get messy if you're doing both kinds of rentals, right? Short-term and long-term, keeping track of all that money coming in, going out.
Oh, absolutely.
Yeah.
That's when a tax pro is worth every penny. They can help you sort it all out, make sure you're taking the right deductions, and, like, paying the least amount of tax you have to. They're like your guide through the money jungle.
No DIY taxes when this much is at stake.
Nope. Plus, tax laws are always changing. Even pros have to keep up. Think of it as like buying peace of mind.
Worth it. So, court case, record keeping, got it. But now Toronto also mentioned something about affordable housing. How does that fit in?
Right, so some folks are worried that this tax ruling, it might make people not want to do short-term rentals. And then that affects how many places are available to stay in and how much they cost.
So, fewer places on Airbnb means fewer options for travelers, and prices go up.
That's the idea, yeah. Complex issue for sure. Because in cities where housing is already hard to find and expensive, if those places aren't being rented long-term anymore, it makes the problem worse. People who need a stable place to live long-term have even fewer choices.
That makes sense, especially for people already struggling to afford a place.
But then there's the other side. Some say short-term rentals are good for the economy, homeowners make extra money, tourism gets a boost, and lots of travelers like the flexibility of the different experience they get with Airbnb.
It's like a good side and a bad side. More money for homeowners, more choices for travelers, but maybe fewer long-term rentals and higher prices. How do you even balance that?
Tough question. No easy answer.
Hmm.
This court case really brought all those arguments to the surface. It'll be interesting to see what policymakers do now. Maybe cities will make new rules or offer tax breaks to try and find a middle ground.
Wild how a tax ruling can start all these conversations, right? Housing, the sharing economy, even just how technology is changing everything.
It really is.
Yeah.
And it shows how much things have changed. Like 10 years ago, nobody even knew W about Airbnb. Now it's huge EE in the travel world.
Technology moves fast. It's like we're always trying to catch up, making laws and rules fit these new ways of doing things.
For sure. And this case is a perfect example. Old rules, new situation, and the outcome is kind of surprising. It reminds us we got to be flexible, rethink what we thought we knew.
It's a lot to keep up with. So ending this part of the dive, what are the big takeaways for listeners?
I think the main thing is just be aware. Even if you're not using Airbnb now or selling anytime soon, know these tax rules are changing. Things are moving fast. Staying informed is the best way to protect yourself.
Knowledge is power applies big time to taxes.
Totally. And if you are using Airbnb, be careful with your records. Maybe talk to a pro. A little planning now saves a lot of headaches later.
Better safe than sorry, right?
Exactly. And remember, this whole case, it might just be the beginning. We might see similar rulings affecting other parts of the sharing economy down the line.
So keep an eye on this stuff. The sharing economy is here to stay. It's just going to keep growing and changing, and our laws and rules are going to have to adapt.
Well said. In the end, it's up to each of us to stay in the loop and make good choices about how we're part of this whole new way of doing things.
That's a great point. It's not about being scared or overwhelmed. It's about having the info to make smart decisions.
Couldn't agree more.
This has been awesome. We really got deep into this Airbnb tax case and all it means.
Then fun.
Okay, so let's zoom out for a sec. This case got me thinking about all the ways technology is shaking things up. Like, what about the gig economy? How is that changing how we think about work and taxes? It's like this case shows how our old systems, they don't always work with new tech. The gig economy is a great example. Uber, Lyft, DoorDash, they've changed how people make money, but like the tax part, so figuring that out.
Yes. It's like we're trying to force something that doesn't fit. What's interesting is that this case really shows us that our old systems, they don't always work with new tech. The gig economy is a perfect example. Platforms like Uber, Lyft, DoorDash, they've changed everything about how people earn a living. But the taxes,
Yeah.
Yeah, we're still trying to sort all that out. It's like trying to fit a square peg in a round hole, you know?
Totally. We're figuring it out as we go. And the rules keep changing all the time. It's like we're building the plane while we're flying it.
Exactly. And it's not just the gig economy either. Think about cryptocurrency, for example. It's a whole new type of asset. And the tax stuff. Governments all over the world are still trying to figure it out. It's like a whole new world out there. And the old rules, they don't always apply.
So this Airbnb case, it's like a preview of what's to come. We're going to see more of these clashes, like old tax laws versus new technology and how we do business.
I think that's a pretty safe bet. Yeah, it's definitely a sign of things to come, I think. And it just highlights how important it is to stay informed, to be adaptable. Things are going to keep changing. And we need to be ready to change with them, with our finances, and just like understanding how the economy works now.
Yeah, that's so important for everyone listening. It's not about freaking out. It's about being proactive, finding good information so you can make good choices.
That's it. Knowledge is power.
Mm.
And that's really what we're trying to do here. Give you the tools, the information you need to deal with this world that's always changing.
Yeah, we've covered a lot today. We broke down that Airbnb tax case, figured out what it means for homeowners, and we even zoomed out and talked about like the bigger challenges for the sharing economy. Hopefully everyone listening is feeling more informed and maybe even a little bit inspired to take control of their own finances.
I hope so. We've definitely given everyone a lot to think about. But the main takeaway is really be curious, stay informed, and never stop learning.
And hey, if you're ever not sure about something, ask a professional. There are experts out there who can help you make sense of it all.
Right, because knowledge is power, right?
Absolutely. Great advice.
Well, this wraps up another deep dive. It's been great talking about all this with you.
It has. It's been a pleasure.
Thanks for joining us on this journey, everyone. We'll see you next time for another deep dive into something important. Until then, stay curious and keep exploring.